Welcome back to the Crypto Bud channel, everyone. My name is Josh, and right now history is repeating because the crypto market is playing out the next leg to the downside just after this bearish warning signal flashed for the fourth time this year. And so later in this video, I'll be talking more about that. I will also be talking about potential price targets to the downside, and I will also be talking about the upcoming CPI inflation numbers that are about to be released tomorrow, which will likely have a significant impact on markets. So make sure you watch this entire video to the end to not miss out on any of this important information. First of all, just quickly talking about the new CPI inflation numbers that are set to be released tomorrow. And in fact, they're specifically going to be released at 1:30 p.m. GMT time on November 10th, which is obviously tomorrow. And basically what these new CPI inflation numbers will actually tell us is what inflation did during the month of October. And so, of course, this will also update the official inflation rate in the US, which right now, by the way, is sitting at 8.2% year-over-year CPI inflation in the US at the time of recording this video. And as of right now, the expectations for when tomorrow's CPI numbers get released are for inflation to drop down to 8% year-over-year based on what the majority is currently expecting. And based on the trading economics forecast, they are expecting inflation to drop down to 8.1% year-over-year from currently 8.2% year-over-year. So basically, the market is pricing in a slight drop in the year-over-year inflation rate when tomorrow's numbers get released. But tomorrow, if we end up getting numbers way outside of expectations, that is where we could see a lot of volatility potentially. And basically, as I explained in my last video on this channel, if inflation drops down quicker than what the market is expecting, that is considered bullish for markets. But if inflation stays higher than what the market is expecting, that is considered bearish for markets. And once again, if you have no idea why that is the case, check out my last video on this channel. And so what all of this means for tomorrow is if inflation comes in at either 8% or 8.1%, then that should be relatively neutral for markets, and we might not necessarily see a lot of volatility once again if inflation comes in at around 8% year-over-year. But if CPI inflation comes in tomorrow higher than 8.1%, or even worse, if it comes in higher than 8.2%, which would show another increase in the year-over-year inflation rates, then that would be very bad for markets. That would be obviously a bearish signal for markets based on everything that I just talked about. But on the flip side, if inflation comes in lower than 8%, so if it drops into the 7% range, then simply based on all of this information, that would actually be considered bullish for markets, and we could actually see a short-term relief rally if inflation comes in lower than 8% year-over-year with tomorrow's numbers. And basically, the further away from expectations that we see, the more volatility we will likely see in markets, which means if we see a massive drop in inflation all the way down to 7.5%, for example, which would be considered a massive drop. I'm not saying this is going to happen, but just in that example, that would be extremely bullish for markets. But on the flip side, if inflation pumped all the way back up to 8.5 or even close to 9% again with tomorrow's numbers, that would be extremely bearish for markets and we would likely see a massive crash. And now, if you want to know what the new CPI inflation numbers will be as soon as they get released tomorrow, then make sure you follow me over on my Twitter for real-time updates throughout the day. And you can find a link to my Twitter in the description down below and also in the pinned comment. Definitely go and do that. But anyway, now getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart. And if we're looking at the daily Bitcoin RSI, so far since the beginning of this year, we've now seen 4 separate times where we've seen a significant uptrend in the daily Bitcoin RSI, and then eventually we see a break to the downside below the ascending line of support. And obviously, as you can see here on the chart, every single time where this has happened, this has basically signaled the next leg to the downside, or at least a lot of bearish price action coming soon for the price of Bitcoin. Now, in this last example, and the third time this happened this year so far, technically this did not signal the next leg to the downside in terms of a new low, because between this signal and this signal, obviously the price of Bitcoin did not actually make a new low below the June low. But with that being said, it still definitely acted as a bearish signal over the next few weeks. And so once again, as I warned about in my last video, we have already seen a break to the downside in the daily Bitcoin RSI, but since my last video, this has now been technically confirmed with a daily candle close. And once again, like I also explained in my last video, these signals on the daily time frame normally play out at least over a few weeks, sometimes even over a few months. And now for those who only buy and hold crypto, obviously that might not sound too good, but believe it or not, there's actually ways to make a lot of money in crypto even when the price is dumping. And if you want to know how to do that, then stick around to the end of this video or check out the links in the description down below and also in the pinned comment. But anyway, now that we've seen this massive bearish signal confirm on the daily time frame, and we've also seen a bearish cross confirm in the daily Bitcoin MACD, we need to start looking at some potential support levels and price targets to the downside, considering the price of Bitcoin currently is trading below this important range of support, which is sitting in between around 18,500 and 19,000. And now, technically speaking, we haven't actually seen a daily candle close below this range of support, at least at the time of recording this video. And so technically you could argue that this still needs to be confirmed, but with that being said, we already have a lot of bearish confluence, like the RSI breaking down, the MACD crossing bearish, and what's happening with the FTX situation, which I talked more about in my last video. And so it would not be surprising to see this next daily candle close below around 18,500, which is the bottom of this range of support. In fact, I'll be much more surprised if we actually see a daily candle close back above 18,500. That would take something significant, like for example, CZ announcing that is officially going through with the FTX buyout, because if that deal does not go through at all, that would likely be very bearish for the crypto market, which I talked more about in my last video once again. So if you missed that, definitely check it out to get updated on the FTX Binance situation. But anyway, now zooming out to the weekly Bitcoin chart, taking a look at the Fibonacci retracement tool drawn from the March 2020 low all the way up to the all-time high for Bitcoin. And in case you're wondering, these Fibonacci levels and this chart are on the logarithmic scale. And the next retracement level to the downside is the 50% retracement level, which is sitting at just above 16,000, more specifically around 16.3 to 16.4K. But if the price of Bitcoin breaks below that 50% retracement level, then just zooming out a little further on this chart, and the next support level to the downside that I'll be watching is based on this previous high back here, which is sitting at around $14,000 per Bitcoin. And now these lower price targets are obviously not guaranteed to be hit, but the chance of these price levels being hit will likely increase if either inflation comes in a lot higher than what the market is expecting, or if Binance backs out of that FTX deal, because once again, if they do that, then that could start a financial contagion event in crypto again, which was of course one of the main factors that caused this move to the downside during May and June, with that financial contagion obviously talking about the Luna meltdown, Three Arrows Capital, and all of those lenders. And basically a situation like that could actually repeat again if Binance backs out of the FTX deal and instead lets FTX basically collapse. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum to US dollar chart, and right now we're seeing the same warning signals already in the daily Ethereum price oscillators as what I just talked about for Bitcoin earlier in the video. And as of right now, these bearish confirmation signals have already been confirmed with one daily candle close. And if you're looking at the last time we saw these two bearish signals combined in the daily Ethereum price oscillators, that was right back here around the middle of August. And obviously what came next was not just some short-term bearish price action, but more of a bearish trend on the daily time frame that lasted for at least a few weeks. And so once again, simply based on these bearish signals confirming with a daily candle close right now for the price of ETH, it's likely that we will continue to see more of a bearish trend play out at least over the next 1 to 2 weeks, most likely. But it is important to mention that in a bearish trend, we don't always see straight bearish price action. In fact, it's very common to see see some bounces here and there throughout a bearish trend, kind of like back here, for example. And now this is not personal financial advice, but usually during a bullish trend, buying the dip or longing the dip is a fairly good strategy during a bullish trend, generally speaking, and vice versa in a bearish trend, basically selling the bounces or shorting the bounces are generally a pretty good strategy in a bearish trend. But once again, that is not personal financial advice because I do not know your personal financial situation, and obviously what you do with your own money is completely up to you. But anyway, now that the price of ETH is back to a bearish trend on the daily time frame, just after this bearish divergence confirmed around 4 to 5 days ago, as I also warned about 4 to 5 days ago right back here, we should now be turning our attention to some important levels of support and potential price targets further to the downside. And as of right now, at the time of recording this video, the price of ETH is struggling to hold above this golden pocket level of support when you draw the Fibonacci retracement tool from the June low up to this swing high during the middle of August on the logarithmic scale. And by doing that, that places the golden pocket level of support at around 1170 up to around 1210. And as of right now, at least at the time of recording this video, we haven't yet seen a daily candle close back below that golden pocket level of support. So technically, as of right now, we have not confirmed a break below that level. But if we do end up seeing a confirmed break below this golden pocket, then the next support level to the downside that I'll be watching is sitting at around 1050. So just above $1,000 for the price of ETH based on this Fibonacci retracement tool. And also, if you're looking at these previous candle closes in terms of these lows back here, these are also sitting at almost exactly $1,000 per ETH. So we should have a decent amount of support at around 1,000 if this golden pocket confirms a break to the downside, which at the time of recording this video is looking more and more likely. And now anything below 1,000, if $1,000 gets broken, then the next support level to the downside that I'll be watching is simply the June low, which is coming into play just underneath $900 per ETH. And now if you want to know how to make a lot of profit in crypto, even when the market is dumping just like right now, then make sure to watch these videos popping up right here on your screen, specifically the video in the top left of your screen, because that video in the top left shows you how to make money if the price is dumping like what it is right now, and the video in the bottom left of your screen shows you how to make money in crypto if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.